Hello, everybody. This is Jimmy Harrell up here at Credit Suite. Today, we're going to be covering the differences between personal credit and business credit. So there are some similarities, but there are some differences that everybody should be aware of. So today, we're going to cover those differences, right? Maybe answer some of those myths. Again, we start every webinar. Our contact information is here at the bottom. So 877-600-2487. If there's any questions that pop up, you can always call in. We'll be here to help you out. info@creditsuite.com is another way to get a hold of us. Personal credit versus business credit. Business credit is credit in the name of a business. So when it's built properly, it has nothing to do with the owner's credit and payment and spending habits. So pros here, obviously, business credit separates the business debt from the personal credit. So it's very important, as we all know, to build out your business credit profile. So it has nothing to do with the owner's credit. So there are the two are separate, even if there is but one employee and one owner. How do these two types of credit truly differ? Personal credit scoring is based on 5 main factors. Most of us may know this. Your payment history, your utilization percentages on credit cards, the overall length of your credit history or your average age of your accounts, the accumulation of new credit, so that's inquiries or new credit accounts showing up will affect your credit, and then having a good credit mix. So mixing up revolving accounts with term loans, things like that. So that's going to be maybe having a mix there, not having all credit cards or all loans. They're called installment loans, but so having a good credit mix. myfico.com/credit education/what's in your score.aspx, a good reference there, where you'll find out a lot of that information. Business credit scoring factors. So in the business world, scores are mainly coming from only one factor: how the business pays its bills. If you pay your bills on time, you'll get a very good credit score. This makes it much easier and faster for a business to build credit rather than it does on the consumer side. Okay? So all the things that we just mentioned about personal credit are not factors on your business credit. Having a good mix, inquiries, things, all of those things, just how you pay your bills on time. That's going to be how you generate a positive business credit score. A business can build a solid credit profile within 90 days or less. You can start qualifying for higher limit major credit cards within 6 months. In the consumer world, it takes a full 6 months to even get a credit score. So if you probably remember being 18 or when you started building your personal credit profile, you opened up a small limit credit card, you made a couple of payments, used it a couple times, and you went to go buy something and somebody told you didn't even have a credit score yet. So sometimes it takes 6 months just to even generate a personal credit score, versus on the business side, 6 months you're actually qualifying for higher limit major credit cards. So it's a little bit faster process. It can take many years of time for consumers to get high limit credit cards. Some of us never get there. With consumer credit, the consumer is liable for the debt. This means that by defaulting could mean losing a car or even a home, right? In contrast, business credit shields the owner. If the business is incorporated, that way the two entities, the person and the corporation, are truly separate, then you won't lose your home, you won't lose your car on bad business debt because it separates it. It keeps it away from your personal assets. Approval amounts are going to be different. So business credit approvals are much higher than consumer approvals. On average, approvals are going to be 10 to 100 times higher on the business side versus the consumer side. Okay, so a big difference there. Your credit reporting agencies. There's 3 main reporting agencies in the consumer world, right? We know Equifax, Experian, and TransUnion. credit reporting agencies in the business world, you still get Equifax and you still get Experian, but Dun & Bradstreet is the major player here. So that's going to be the largest business credit bureau or reporting agency in the business credit world, okay? TransUnion does not report on business credit. In the consumer world, the three reporting agencies have a similar number of consumer records. This has to do in large part with them splitting up the smaller reporting agencies between them over the decades, okay? Again, more information on credit reporting agencies. In the business world, Dun & Bradstreet has more than 10 times the records of the next closest reporting agency. So they are by far the largest. While building out your business credit profile, you will experience a lot of your accounts will report to Dun & Bradstreet, almost all of them. A few will report to Experian and Equifax, okay? So Dun & Bradstreet is where a lot of people focus on building their business credit profile. So it says again there, major player, there's two smaller ones, Equifax and Experian. You can go to dnb.com, dunandbradstreet.com, /about-us/company, and get more information on setting up a report with Dun & Bradstreet as you build out your credit. Some time frames, okay? Business credit score is a mathematical model used to depict a business risk of going 90 days late on an account within the next 12 months, okay? So they're using a mathematical model to determine the risk of you going 90 days late on an account within the next year. Consumer credit is a mathematical model used to depict a consumer's risk of going 90 days late on an account within the next 24 months, okay? So they are determining the risk of you going 90 days late over 2 years on consumer credit. So when you're looking at business versus personal credit card, the time period for referenced on a business credit report is half as long for the consumer, right? 2 years versus 1. Here's something very important. One of the most important things you can take from this video today. How long before a late payment goes on a report? 1 day late on your business credit account can be reported on your business credit report, okay? So we know personal side typically get 30 days, a little grace period there. 1 day late on business credit accounts, and they can report you as late to your business credit report, okay? With personal credit, you legally can't do that until 30, all right? Late payments are going to loom very large on a business credit report. That's why, if you remember the first couple of slides, we talked about 5 major factors for personal credit and 1 major factor for business credit. Remember what that 1 major factor was? Your payment history, okay? So pay it on time, pay it early, don't pay it late. It gives them the ability to report late on your report. So your scoring is going to be a little bit different, your scoring model. So on consumer credit, it reflects an individual's likelihood of defaulting on an obligation. A business credit score reflects the business's likelihood of defaulting on an obligation, okay? So your business profile is going to be that deciding factor, not your personal. Business owner, being you, spending and payment habits are only under consideration for personal credit. So utilization on a business credit card that reports to a business credit bureau is not going to affect your business credit like it does on the personal side, okay? Scoring ranges. So here's the scores. It's going to be a little bit different than what you're used to. Another major difference between business and consumer credit is the score range in credit reports. So on a consumer FICO score, you can go anywhere from 350 to 850, depending on how well you pay your bills. 850 is the best score that you can get. Business credit scores will typically range from 0 to 100, okay? 100 is the best score. Now, when you are in that 80 or higher range, typically means that you're just making on-time payments, okay? So you want to be above 80. When you start building your business credit profile, you will realize and experience that your credit score is not automatically going to be up there as you deepen your profile and add new accounts, again, this is the beginning stages, you'll see your score get above 80. So typically they're going to say there's not enough accounts or history there for you to have above 80. Just keep adding accounts, you'll be above 80. Just make your on-time payments. So inquiries on your consumer credit score, we probably have all experienced this. It can lower your credit score. A lot of merchants and lenders will conduct inquiries when they're doing businesses with you for the very first time. You do not want their inquiries to impact your personal credit score. A lot of inquiries in short amount of time can hobble any efforts to get a loan, personal or business, right? So if they see 3 or 4 inquiries in less than 6 months, there's a lot of lenders that will not approve you due to the recent activity or the amount of inquiries on during that short period of time. How long the data stays on your report. So Experian business, bankruptcies will stay on there for 7 to 10 years, okay? Chapter 13 bankruptcy rolls off your credit report 7 years from the filing date. So a couple differences. Chapter 7 stays for 10 years from the filing date. Trade data stays on there for 36 months. Your judgments, any collections, any tax liens, 6 years and 9 months. UCC filings will stay on there for 5 years, okay? So those are some important timelines there. You can take a picture of that. You can rewatch this video at the end. It'll be listed right back onto YouTube. You can find this and watch it at your own pace. But this is important timelines here for bankruptcies, judgments, liens, collections, UCC filings. They'll stay on there for 5 years. So expect similar timeframes for Equifax and Dun & Bradstreet, okay? So on the personal side, here's your differences. Most negative information stays on there for about 7 years. Bankruptcies will stay on your Equifax personal credit for 7 to 10 years, depending on the type. Closed accounts paid as agreed will stay on your personal credit for up to 10 years. Expect similar timeframes for Experian and TransUnion as well. TransUnion will specifically state that positive information stays on for up to 10 years. Keeping business and personal credit separate. There's a number of reasons why these two types of credit being separate is a good idea. If you've been smart and set up your organization with an EIN number, then at some point in the process, you need to tell the IRS that your small business is a genuine business and not just a hobby. So as a result of this, the IRS is treating you and your small business independently when it comes to tax liability. So for that reason, if you're still floating interest-free loans to your business with your consumer credit cards, now's the time to stop doing that, okay? So you need to separate it. Stop using personal credit cards for business purposes. The last thing you want to be doing is commingling funds. Okay, you don't want to do that. That's going to get you in trouble. It's going to get you caught up. So the IRS doesn't like that. It can actually trigger you being audited. So simplify your life. Don't confuse the IRS. They'll know you're using personal credit cards for business expenses, so don't do it. Why build business credit in the first place? Great question. One, you're going to save your personal credit for your own expenses. You're not going to tie that up. It's technically possible to use personal credit cards for business, but that's the last thing that you should be doing. Even if you pay one of your business invoices promptly each and every time, you are not doing yourself any favors by using a personal credit card or any other personal accounts like checking or savings accounts to settle any kind of business debt, right? Don't take a loan against the house. Don't do a personal loan. Stay away from that. Why? Because personal credit scores are impacted by what's known as credit utilization rate. This is just a calculation of the credit that you're using divided by your total available credit. So you want to keep this ratio about 30% or less. So if you're constantly using personal credit cards for business expenses, you're going to try to figure out why your credit score won't get above a certain score, why it won't rise above 680, why it won't get above 650. And that's because your utilization keeps showing up as you use these accounts. It's preventing you from getting your score to raise higher. So on the personal side, we're told that we need to be less than 30% utilization on our credit accounts. As a result, if you're using personal credit cards for business expenses, you're inflating your credit card utilization rate. If you bring it above 30%, your personal credit score is going to go down. This happens even with you're diligent about satisfying all company debts. It's not what your personal credit cards are for, so don't do that. For the big credit reporting agencies, credit history is one of the components they use when determining your business credit score. The longer and better your credit history, then the better your small business credit score is going to be. When you consider what credit score is needed for a business loan, then you need every bit of your credit score that you can get. If you start early and manage your business credit card accounts responsibly, it's going to help. Okay? So the longer and better your credit history, then the better your small business credit score is going to be, which is going to help you secure business loans. So why should we be building business credit in the first place? There's going to be times when the work runs out. If you're in a seasonal business, then this is a part of its DNA. But every firm can endure leaner times. If you need to make payroll or equipment payments or just cover the rent, you're going to need to use business credit to get by. By building your business credit before you actually need it, you're much more likely to get better terms or even credit and loans at all. So consider how the lenders are thinking. Banks, and like regular, ask for personal guarantees, right? So they're almost always going to ask for a personal guarantee. It's because they know you, but they don't know your small business. Your personal credit score has been around probably a lot longer than your small businesses has. So that's why they're going to ask for personal guarantor. They want to know more about your payment history and your payback history. Additionally, small new businesses typically commingle cash with personal accounts. If a business is not profitable immediately, a business owner might float a loan to the business with or without interest. This commingling of funds does no good when building business credit. Commingling is clearly creating confusion with the creditors, hence that they want a personal guarantee because to them, you and your business are one and the same. Building business credit and incorporating will reduce the chances that you would have to provide a personal guarantee, okay? Getting them to be separate. There's some more benefits of building separate business credit. If a company credit is separate from consumer, it helps to protect a small business's owner's personal assets, right? This is in the event of litigation or business bankruptcy. With two distinct credit scores, an entrepreneur can get two different cards from the same merchant. This effectively doubles your purchasing power, okay? So go back to the protecting your assets. So it's going to help protect a small business owner's personal assets. When you keep it separate and you're not using personal credit to fund your business, then they can't come after and take away, again, cars, houses, things like that. It's very important to keep yourself protected, your personal assets protected. So even a startup business can do this. So heading into a bank for a business loan can be a formula for disappointment. Building corporate credit, when done properly, is the plan for success. Individual credit scores depend upon payments, but also various other factors like credit utilization percentages, okay? But for small businesses, the scores only hinge on whether a business pays its debts on time. Sometimes a business opportunity is simply too good to pass up. You should act immediately. However, you may not have that kind of funds handy. Building business credit means you get bank loans faster and with better terms. You have a chance to capitalize on these opportunities and seize them when they are still relevant, okay? Very important, especially if you're doing something like real estate, to be able to have those available. Without business credit, even if you get a loan, it will certainly take longer, and someone else might buy those economical raw materials or outbid you on a prime real estate deal, okay? So to recap, personal credit scores depend on more factors than business credit scores do. Inquiries affect personal credit scores, but not business credit scores. The amount of time the data stays on your reports differs between the two. You can get much higher approval amounts with business credit. You can build business credit a lot faster than you can build personal credit. You get access to every legitimate funding program in one place. And you pay us no fees, ever. Use our loan volume to get lower rates and fees. A business blueprint to graduate to SBA loans. Never look for funding again. So this is something we can help you do. We can help you get access to every legitimate funding program all in one place. You're not going to pay us any fees or anything to refer you to these lenders to get you pre-qualified. Business blueprints, we're going to help you graduate to get SBA loans and get you in a position to qualify for that. You'll never have to look for funding again. Okay? So you can reach out to us, send us an email, call that 877-600-2487 phone number with any questions. We'll get you set up with one of our finance professionals and get you qualified for some type of business funding. We can also help you build out your business credit profiles. Thank you so much.